Could you walk us through your thinking about trade? It was really the threat of tariffs against Mexico that caused at least the market to become definitively banking or pricing in rate cuts. If, for example, there's a deal with China, does that take the possibility of rate cuts off the table?
Yeah, so I would say that we're not looking at any one thing. I guess I would start by agreeing with your premise that news about trade has been an important driver of sentiment in the intermeeting period. But we're also looking at global growth. It's really trade developments and concerns about global growth that are on our minds. So we're not exclusively focused on one event or one piece of data. Risks seem to have grown. In the meantime, we have incoming data in the United States that's been pretty good, particularly for the consumer. Consumer spending is solid, supported by a healthy job market, high levels of employment, wages going up. We do see, though, some areas that we're looking at, such as I mentioned, business fixed income. So also the prolonged shortfall in inflation and perhaps job growth. We don't like to look at one job report. We like to average over 3 or 6 months, but still that bears watching. So we'll be monitoring the implications of all of those developments for the U.S. economic outlook. We expect to learn a good deal more, as I mentioned, and we'll be asking the question whether those risks are going to continue to weigh on the outlook. And then, in the end, we'll use our tools as appropriate to sustain this long expansion.